Why family businesses fail. Part 2 by Basheer Juma. This is second video on this topic and focusing on failure of families in business.
Bismillahirrahmanirrahim. Assalamu alaikum. This is our second video relating to failure of business, and this pertains to the failure of family business or failure of families in business.
Why family businesses fail, or why families in business fail. We intend to cover these topics. 01 Mismatched culture, vision and values. 02 Inconsistent financial culture and matters. 03 Founders or owners' unwillingness to share the power. 04 Avoiding consultation. 05 Injustice or not playing fairly. 06 Lack of integrity and transparency. 07 Family and business governance issues. 08 Not having big picture. 09 Operational matters. Number 1 Vision, culture, behavior, and communication mismatched. Different generations, different, diversified, and inconsistent visions. Not understanding the business and family as separate. Conflict between and amongst the family members. Always disagreements and delayed decisions. Lack of free open communication and deliberation. Open discussions and vocal disagreements in meetings are not appreciated. Lack of patience, tolerance, and sacrifice of own opinions and willingness to understand and compromise. Number 2 Financial culture and related matters. Mixing of personal finance with the family business finance. When you are in business, financial matters become separate for family and for business. Financial competition between family members. Inconsistent remuneration. Intergeneration and intrageneration inconsistencies. Lack of formal agreements, family constitutions, roles, responsibilities, recognition, and remuneration. Not having a family constitution to deal with matters leading towards disagreements. Number 3 Sticking to the chair. Lack of succession planning. Not having a formal agreement between the family partners. Not having a formal business relationship agreement for the family members with the founder of the business. Not having a family constitution for retirement age and exit clause. Not giving a consideration to the succession planning for leadership and distribution of wealth matters. Founder and older generations not willing to give up power despite the availability of competent successors. Assigning friends and acquaintances to managerial positions and deeming them as partners or owners without a formal agreement. Number 4 Avoiding consultation. Lack of trusted advisors. Failure to get appropriate advice and guidance. Lack of support for the accounting profession in the progress of family business. Lack of formal audit and system reviews. Number 5 Injustice, not playing fairly. Promotion of unqualified business members as compared to competent members. Nepotism, conflict of interest. Exclusion of certain family members by playing politics. Number 6 Lack of integrity and transparency. Lack of tax transparency. Evasion of tax by having 2 sets of books of account. Latent or apparent corruption. Conflict of interest. Uninformed simultaneous businesses. Not pooling the required time and efforts to the family business. Number 7 Governance. Undefined roles, responsibilities, and boundaries. Lack of internal consultation and listening protocols. Higher number of family members given higher position with higher remuneration and perks without the need of business. Thus, diverting the profit from the pool to individuals. Conflicts between the family members and the professionals' non-family members. Strives between family members regarding the assigning skillful family members to managerial positions. No formal leadership role and job description. Many persons are authorized to take key policy decisions without a formal consultation and documentation. Families focus on estate planning and not training next generation. Always available to family and supporting family as compared to business. Lack of technical, business, and financial education for the family members. Number 8 Not having the big picture. Not having a defined purpose and vision by key business owners. Not understanding and adjusting with the challenges of the business. Unable to determine new strategies and develop new products. Number 9 Operational matters. Not being able to attract skillful professionals who are outside the company. Inability to adjust the company to market conditions. Insufficient financial resources. Unable to establish a proper record system, thus unable to control costs. Lack of business planning. Personal use of business funds. Overexpansion in competition with other families. Inadequate inventory management. Macroeconomic factors. Political pressure. Lack of delegation with responsibility and training, resulting in excess dependence on single individuals who end up creating a narrow funnel for progress. Overspending on advertising with mismatched supply chain. Thank you for watching. Families in business failure, family integration, second-generation bridging work and related matters. The contact details basheer.juma@gmail.com. Basheer Juma YouTube, Facebook and LinkedIn.